considering how quickly the overall economy is becoming digitized.
AI is rapidly changing every area of business, so could it make some companies obsolete?
Anybody with an internet connection and access to these AI models can pretty much replace whatever you're doing.
MarketBeat's Gabriel Osorio-Mazilli breaks down 3 AI-safe companies that are set to withstand these fast-paced market changes.
No matter how much AI takes over that space, nobody's going to trust leaving human lives in the hands of AI.
Are these 3 companies built to last whatever changes AI might bring? Let's dive in. Gabriel, so great to have you back on the show, talking about an important topic today, and that's AI, but a new fear that's kind of coming up with some investors right now. As we see all this AI development and growth happening, a lot of investors are starting to ask what companies could maybe see a downturn because of AI. Could they see their business entirely replaced, or could their stock start to drop because AI is kind of making their business obsolete?
Right, that is one of the questions that investors want to have answered right now. Is AI going to come after some of the business models that are popular today? Are they coming after the employees? Are they coming after the service itself, right? And replacing not only the workers, but essentially the value offer that these companies bring out to the market. And I think that today's list of stocks answers that question pretty directly and also sets a foundation for other companies in the future that investors might want to have that answered as far as the business models go.
Now let's talk about being AI safe or having that moat where AI isn't going to replace the business. Are there some specific examples already happening in the market where we're seeing not so AI safe companies out there?
Yeah, absolutely. One of them I would like to mention is Duolingo. Over the past quarter, it's been down 38%, whether for fundamental reasons or other sentiment changes, right? But in my view, I think it's one of those unorthodox indicators that you find on places like Twitter or just talking to people around the financial sphere. One of the examples I would say is that there was this person that made an entire language tutor on ChatGPT for free. And I mean, if you can do that for companies like Duolingo, then you don't really have a business. You have a service that has no moat around it, that has a low barrier of competition, meaning anybody with an internet connection and access to these AI models can pretty much replace whatever you're doing, right? So to answer the question initially, I would say investors have to look for those companies that have some sort of regulation, some sort of unique service or moat that nobody else can just come in, like I said, with an internet connection and access to ChatGPT and pretty much replicate whatever the business is doing currently.
It's a really good point, and also why I think this list that you have for us today is so interesting because AI really is a central part of these 3 companies we're going to talk about today. So much so, they could even make the list of the 10 best AI stocks to invest in this year. If you haven't seen this free special report yet, it's definitely worth checking out. You can scan the QR code now or click the link in the description of this video to get that list totally for free right now to see which companies make that 10 best list for the whole year of AI investing. Now, these 3 companies we're about to talk about, Gabriel, really are heavily involved in AI and could be on that list, but they also have an element of safety from all of the changes that are happening with AI in the marketplace. So let's get right to that first company on your list, Gabriel.
Yeah, so the first name that I picked is pretty much an obvious thing if you already know what you're looking for, right? And that is Intuitive Surgical. While AI is at the forefront of this company, making robotic services for remote surgeries and other automations to the space, right? Making it more efficient, some say even safer, and allowing doctors to operate whether they are at or aren't at the surgical spot, right? If they're at the hospital, if they're on vacation and get an emergency call, they can still get the surgery done. Now, there is the subject of regulation, right? Whether you have AI, whether you have fully automated robots, which I don't think is going to be the case anytime soon, you still need to have a doctor operating behind it. You still need to have people writing these models, writing contingency plans in case those unexpected events happen during a surgical procedure, right? So I think that no matter how much AI takes over that space, Intuitive Surgical is going to be right there, being irreplaceable, providing sort of a revolution to the space, but not necessarily replacing it. You just can't replace it, right? Nobody's going to trust, whether it is Congress, whether it is a person in emergency, nobody's going to trust leaving human lives in the hands of AI. That's just uh, unthought of, right? It's just not going to happen.
Yeah, AI can definitely be a part of the surgeries, but like you said, that human guidance and the regulation behind that will probably always include some kind of human guidance. So that's an interesting way to look at intuitive surgical. I do think that it's important to talk about intuitive surgical and the value proposition that they offer is making these surgeries more effective and safer, more accurate. And so there is some benefit to AI in this company too.
Exactly. And those benefits are what make it a unique value offer. And you've seen some of the price action reflect that. And the company's still small enough that it can deliver outsized returns. As we've said before, it's much easier for a company that's small in market cap to double or even triple in valuation than it is for a really big company such as the tech names that are in the trillions now, right? So I think that's the case right now with Intuitive Surgical. More and more investors are going to realize the benefits that this company brings to the efficiency, to the safety, and to the volume of surgical procedures that can be done today. That not only translates to saving lives, but also improving the working conditions of many doctors out there who work countless hours and have to be on the clock wherever they are in the world, right? So keeping that in mind, I think it's going to be an attractive proposition for the industry itself, for end users, and it's also going to be protected by those fundamental truths, whether it's regulation and whether it is just the safety preference of having a trained doctor, having someone that's experienced training these models and operating these robotics behind the scenes.
Before we move on to the next name on your list, I want to talk about some of the fundamentals of this company and just pull up the chart and what analysts are saying about Intuitive Surgical. It's been a while since we've talked about this stock on the channel, and it's just good to have an update on what kind of movement we're seeing in the stock right now.
So this I would take as an opportunity considering how bad the stock price has been performing, right? It's down about 40% from its 52-week high. And I think the reason is that more popular or the red hot names in AI have taken over. And it may also be because some investors are wrongly assuming that AI is coming after the field, coming after the employees, coming after the technology, right? As you have seen from companies like we mentioned, Duolingo, a lot of these software and AI related names haven't seen that good of a price action because of the fears of replacement. But this is where analysts have remained strong with their views about Intuitive Surgical. Because right now, Wall Street analysts still see the stock valued at 595 per share, which is about 32% upside from where it trades today, and still below the 52-week high of $616 a share. So I think that as long as Wall Street analysts do not give up hope on this stock, even though it's been performing on a very, very bearish note, I think investors shouldn't give up on it either, especially consider the fundamental walls and moats behind this company.
Yeah, it could definitely be an entry point if you're interested in Intuitive Surgical. Thank you for bringing this one to our attention. Let's get to that second name on your list of a company that's using AI right now, but still is AI safe in the future.
Yes, that name would be CrowdStrike. And of course, like you mentioned, this company lives, breathes, and relies on AI for everything it does. However, just like Intuitive Surgical, there is some regulation that protects this company. And if not the regulation that will stand forever, then at least the preference for safety and the data itself from the end user. I mean, you don't want to trust your entire confidential data to a robot that could be hacked or could leak some information either by mistake or by malfunctions, right? So CrowdStrike and its proprietary software and the proprietary systems that they use, sure, there's AI involved for efficiency, for better data management. But as far as the safety, that's where the human element still comes into play. The human compliance factor that comes into CrowdStrike's business model. And I think that's not something that's going to go away anytime soon. So that's a factor that investors could rely on when it comes to CrowdStrike and its future safety even in the middle of this AI revolution.
I think this is a unique way to look at these companies, Gabriel, of what is a company that has a value proposition that can't be easily replaced or taken away because of AI advancements and all of the quick changes happening in this field right now. And I think the regulation piece is key, and that safety piece is key when you think about, well, there always have to be some kind of safety layer in place more than just a chat GPT program, right? Something extra, some proprietary software, some human engagement and intervention, just like you said. And that's where CrowdStrike definitely fits this bill. One thing with this stock I think is important to talk about is competition. They're not the only ones doing this. What makes CrowdStrike stand out above some of the other companies that have similar offerings?
I think the answer is scalability, size, and market share, right? There's definitely other companies that offer similar services when it comes to data management and data upkeeping, safety, and confidentiality, but none of them have reached the scale that CrowdStrike has done. Maybe not so much in market cap or revenues or the typical KPIs, right? But when you look at the customers that have trusted CrowdStrike with their data, I think that's where it all comes into play. Earning the trust of some of the companies in the S&P 500, some of the mega cap companies as well, with user data, which is essentially the lifeblood of these businesses. I think that's a good indicator of trust, upside, and growth potential for CrowdStrike moving forward.
Well, let's take a look at what analysts have to say about CrowdStrike and what kind of stock moves we've seen in this company over the last couple of weeks.
Of course, so the current price target is set at $460 per share, with some going as high as $555. So that's double-digit upside for those who are wondering. And of course, there's also $7 billion of inflows coming from the institutional side over the past quarter, which I think signifies some of that trust. Some investors could see it as a vote of confidence moving forward when it comes to that moat around CrowdStrike's business, even in this AI revolution. So if I were to judge all this data into one single theme, is that AI won't be replacing CrowdStrike's employees, customers, or even the business model itself.
Let's talk really quick about entry point for CrowdStrike. I think this one, compared to Intuitive Surgical, is maybe towards the higher end of its 52-week highs. What do you think about getting in now versus waiting a little while?
Of course, buying a stock near the highs is always a worrisome decision for some investors. I mean, the scary part is, am I buying close to a double top or a triple top? Am I buying close to the end of the cycle of hype and excitement for the stock? And the quick answer is, you have momentum on your side. You have institutional buying and you have analysts remaining bullish on the stock. Those three factors usually mean there's something in the future of the company, whether it is the industry, the economy, the company itself, but some factors are standing on a bullish way for CrowdStrike to keep pushing forward. And keep in mind, if it does get back to the 52-week highs and breaks out, a bigger wave of institutional buyers who rely on these momentum strategies could very well come into play. And all that demand for the stock is only going to benefit those who are willing to buy at the highs and not regret it later when the stock keeps breaking out and out and out, right?
Yeah, that's a really good point for CrowdStrike for sure. Thank you, Gabriel, for that second pick. Let's move on to the third company that's an AI safe pick, even though this company has a lot to do with AI itself, too.
So this stock is more familiar among financial circles, right? And that would be Snowflake. So similar to CrowdStrike, Snowflake is a data manager and keeps the confidentiality and management of this data in a efficient, safe manner, right? The difference is that Snowflake also carries user personal data as well as enterprise data. So the same concept comes into play, only on a broader scale when it comes to the consumer base. So you may have competition just like CrowdStrike does, but at the end of the day, it is the trust and the size of the business model that can carry this one forward, as well as having those moats and high walls around it when it comes to keeping data safe, manage it in the right way, and earning the trust of future customers as well.
More on the safety and trust is why this one has that more AI safe of a stock pick. I think the question here is, with data management like this and cloud services, are we going to continue to see new updates and new developments that could change this business model? Or do you see Snowflake's business model really having staying power for years to come?
Well, the short answer would be, what's the difference between data management, data storage, and actual physical storage, right? The business model I don't think it's going to change that much. You have warehouses that have operated under the same business model for decades, right? The fundamentals of it, I don't think will change, but the size of it will. I think the pie is very, very small right now, considering how quickly the overall economy is becoming digitized, right? Not only in the United States, but in Europe, in Asia, and even Latin America, right? So as more customers and as more businesses come to the online digital economy, their data have to go somewhere. Their data has to be kept safe. It has to be kept well managed, confidential, like I said. So if you believe in the online economy and how fast it's growing and it will keep on growing, then this business model and industry itself is going to get bigger and bigger and bigger.
I know Thomas Hughes has been on talking about Snowflake before, saying that there's a lot of potential for growth here. I'm curious what analysts have to say about the future of this company. Are they predicting that kind of growth ahead?
Well, some of them may have been pricing in some of the revenue growth and earnings growth that is coming into the future, which is why the consensus view is of a moderate buy, valuing Snowflake at 255 per share, which is around 15% upside from where it trades today. However, there are outliers as always, but these are taking a bold risk on their reputation and careers to make this sort of call of a more realistic view when it comes to the growth of Snowflake and what it can be seen in the future. One of these is Oppenheimer analysts, right? They see the stock valued at $275 a share, which is a little over 23% upside from where it trades today. Now, keep in mind, 23% upside for a company as big as Snowflake is not an easy task to achieve, right? So when you look at the reasoning behind this sort of calls, there has to be enough growth. There has to be enough tailwinds behind the call like this one. And retail investors will figure out that this statement will be as true as ever when high barrier companies and high mode companies like Snowflake, CrowdStrike, and Intuitive Surgical keep taking on market share and keep filling the vacuum of space that will be left behind by those companies that have been taken out by the low barriers, highly replaceable business models when AI comes into the broader economy as it is today.
Yeah, I think that's what's a really good thing to end on is just as we're talking about these three companies, we're talking about potential upside over the next year. But these feel like, and this discussion feels like more long-term picks that are going to withstand all of the changes that AI is going to bring to the marketplace over the next couple of years. Do you think that these three companies really have that long-term staying power to have even greater returns over time for investors?
Well, at the end of the day, that's a question for the crystal ball, which I left at home today. So I would say think about it as far as the industry goes, right? So surgical procedures, they're not going away anytime soon. The role of doctors and trained professionals isn't either, right? So when it comes to the first pick, Intuitive Surgical, I think it's a safe bet for the years to come. And then when you look at the digitization of the economy, like I said, not only in the US, but globally, data is going to be involved, whether you like it or not. If you have to make an account for a Slack channel for your remote work, or whether you join a corporate and have to create accounts for those communication services or just keeping your profile at hand, those companies will protect your information using companies like Snowflake, CrowdStrike, and even for customers as well, right? If you open any sort of account with Gmail, with ChatGPT, with YouTube, anything that you make an account with, your information has to go somewhere. And that is where these two companies come into play as well. And I think that is exactly why all three are going to be protected. They're not really replaceable at this point. They may have some competition coming in, but at the end of the day, when you trust your life to a surgical procedure, you want to be with the people that have been around and have proven successful. And same thing goes for your personal data. If you don't want to risk a leak or identity theft, you're going to go with the popular names, which are the names on this list today.
All right, Gabriel, very good conversation and a good concept to start thinking about as investors. We'd love to hear from you in the comments too. What are some companies that you fear could be replaced someday by AI and maybe their value proposition will no longer be valid because of AI? We'd love to hear those comments. Also, love to hear your thoughts on these three companies and whether you think that they have the staying power for investors getting in now to ride through whatever changes AI might bring to the marketplace. Let us know your thoughts in the comments. Thanks again for watching, everyone. And as always, happy investing.